Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, November 10th. We're starting off with Fitbug, where it looks as though we've got a decent breakout from this mid-move consolidation, which occurred towards the end of October, beginning of this month. The hope for the bulls really is that there'll be no break back below the 10-day moving average, now at 4.99 pence. That was the place to go long, really, on the consolidation that we had, or the pullback that we had from last month's low towards 8 pence. Bounced off that several times, and then we had the breakout on Friday. So while there's no end of day close, the assumption is a minimum retest of 8 pence. And if this really is a mid-move consolidation, one would be looking for much more, maybe towards 10 pence plus over the next few weeks, even though the shares with an RSI at 77 at the moment are on the overbought side. And next up is a stock which I'm aware that some people have given up on in terms of the buy argument. Been a very rough ride after the spike that we had in October. That was a failed gap fill, and now we've seen consolidation towards the floor of the September gap at just above 2 pence. So between two gaps, obviously you'd expect a stock or a market to be very volatile, and this is the situation here. We do have an RSI support line. We do also have the support line of this rising February price channel based around the 50-day moving average of 2.33 pence. That's the end of day close stop loss on the buy argument, and at least above that support combination, you'd be looking for a partial or even full retest of October resistance. The initial target is 3.59 pence. If you're cautious on the shares, you wait for an end of day close back above the 10-day moving average at 2.85 pence, and that would have worked quite well in terms of avoiding the latest bear trap rebound that we've seen over the past week. So a situation to watch there, especially if we can break back above the 10-day line at independent resources. Next situation is President Energy, which is actually a very encouraging formation that we have here. We've got this bull flag breakout. The bull flag's either side of the 200-day moving average, which is a typically strong maneuver. We've already been treated to a bear trap gap reversal in October, and that was towards the 12 pence level. So that was a strong and a big buy signal. And the situation now is really that while there's no end of day close back below this latest bull flag, 32.5 pence, you'd be looking for significant further upside, possibly equal to this sort of the 20 pence or so initial leg to the upside that we've seen. That would take us towards the 50 pence on a measured move basis, but there's also the chance of a bit more. The top of this channel from the beginning of the year heads as high as 60 pence. So target, let's say, towards 50 to 60 pence over the next 1 to 2 months, risking 5 pence, which seems to be a decent risk-reward profile on this possible bull situation. Finishing off with Xcite Energy, which has not had a great autumn to date, but there are signs that it's starting to bubble under here. I recommended this as my monthly pick on Spreadbet Magazine, which has come out now. But the view here is that we've had the higher support coming in above 40 pence for the end of October, then what could be a bull flag consolidation based at the 20-day moving average at 42 pence. And then the target would be back towards at least the 50-day moving average at 53 pence, or the initial support for October. But obviously the big call here is that one would be hoping for a full pushback within this falling trend channel from the beginning of the year back towards 60 pence. So risking maybe a couple of pence, there's no need to risk more than that to try and get 5-10 pence of upside over the next few weeks. That's it from me. More updates at spreadbetmagazine.com.